As we've been reporting, the Federal Reserve raised interest rates by 25 basis points on Wednesday, marking its ninth consecutive increase. It's part of an ongoing effort to tame record-high inflation. Jeanna Smialek joins me now. She's a Federal Reserve and economy reporter at the New York Times. Jeanna's also the author of a new book titled Limitless: The Federal Reserve Takes on a New Age of Crisis. So, Jeanna, it seemed like Powell had two stories to tell today, one on interest rates and one on the banking system. Let's start with rates. What did you hear from him on Wednesday?
Right. So the Federal Reserve raised interest rates, but only by a quarter point. So not a huge rate increase relative to what they've done over the course of the last year. And they really signaled that they're still pretty worried about inflation. Chair Powell talked a lot about the fact that in the sort of period between their December Federal Reserve Open Market Committee meeting and currently, the last time they released interest rate forecasts and today, we've really seen inflation surprise to the upside. We've seen very strong price increases. We've seen a lot of strong consumer spending data. We've seen strong jobs numbers. And so I think that was really the culmination of that data is why we saw a quarter point rate move today, despite, like you alluded to, some of the banking turmoil that we've been seeing.
Is it possible to interpret Powell's view of the world and what will be necessary to tame inflation and then kind of come up with some understanding of what the economy will need to look like and what it will need to go through for regular people for it to get to a position where the Fed feels like it's done its work?
That's a much harder thing to understand right now than I think it had been prior to 2 weeks ago when the bank turmoil started. What we heard very clearly from Chair Powell today is that officials do not know what this bank turmoil is going to bring for the economy. They expect it to slow the economy down. They think it's going to do some of their work for them. They clearly suspect that they might actually not even have to raise interest rates anymore, but they're not ready to commit to that yet. They still forecast one rate increase this year. Chair Powell really kind of left the options open when it comes to what comes next. And I think the end result here is that they're really pretty concerned about what's going on. They want the economy to slow it down, but they wanted to do that in an orderly way without a painful recession. And I think the risk is that this turmoil that we're seeing in the banking sector right now, that could actually increase the risks of that painful recession that they don't want to see.
Right. And before we get to the banks, Chairman Powell said that there is still a pathway to achieve a soft landing. But a few weeks ago when we talked, Powell had said that things were going to get bumpy. So I'm confused. How is a soft landing possible when things are going to get bumpy? And between when he said bumpy and now he's saying soft landing, there was all of this hiccups and turmoil in the banking system.
Yes. So he said that a soft landing is possible, but he clearly indicated that while it's still a path, it's a dicey path. I don't think it's in any way sort of the absolutely, foregone conclusion that we are going to have a gentle landing here. It is pretty clear that we've hit a hard patch of turbulence when it comes to the path toward that soft landing. Inflation's been a lot more rapid than I think many economists and many Fed forecasters had anticipated. It's just got a lot more staying power and it looks stickier than people had expected. And then on the other side of things, we've got this bank turmoil, like you suggested. Financial markets are not looking great. And so that makes the path a lot more challenging.
Speaking of the banking system, what did you interpret from his remarks on its stability?
I think that government officials in general are trying to send a message right now, which is that the banks are stable, the banks are secure, the banks are resilient, and they're going to make it through this period. I think it's important, as a consumer of the news to try and understand, what they mean by those statements. I think what we're really hearing from government officials right now is that things are uncertain, but they're very much on watch and they stand ready to do what is necessary to make sure that the system stabilizes. And we've really seen them back that up with actions. The Fed has done a lot over the last couple of weeks to try and stabilize the global financial system.
Your new book title is Limitless: The Federal Reserve Takes on a New Age of Crisis. And since we last talked a couple of weeks ago, there's already been a new kind of crisis, which is in this banking system. What did Powell say about the Fed's role in watching the banks? There's been a lot of criticism that the Fed, dropped the ball here on Silicon Valley Bank and its role in making sure banks don't get overstretched.
Yeah, the Fed has been very blunt about the fact that it agrees it clearly dropped the ball at some level here. Healthy banks don't fail. the Fed is supposed to make sure that these banks remain healthy. And what we heard from Chair Powell today is a real acknowledgement that they need to figure out what went wrong here, a commitment to doing the internal review that we knew that they were planning on doing, and also an openness actually to an external independent review, which is something that Elizabeth Warren, the senator from Massachusetts, and others on Capitol Hill have been calling for. And so I do think we're going to get a lot of scrutiny over what went wrong here, what the Fed could have done differently, and sort of what lessons we should take away from that for the future.
All right, Jeanna Smialek, thanks again for being with us. We appreciate it.
Thanks.